Well, let's talk both about, I mean, we just talked to you literally a couple of minutes ago about both of the retailers. We're looking at a market that's going to open lower this morning. Does that make sense to you?
Well, yeah, I mean, we've had a nice rally off the June lows, Andrew, and I think it can continue between now and the end of August. We don't get many inflation reports, thankfully, but I think after the end of August, we get to a rocky time, right? I mean, September is historically kind of a challenge for the markets, and we also do then get more inflation data, and we get more economic data, and then we have the Fed meeting. So I think between now and the end of the summer, I think we can do well, or the end of August. Right. But I do think we're in this choppy environment because we still have to deal with inflation, period. End of discussion. Well, it's too high, and the Fed is really going to fight it.
What's the chance the market really gets rocked by the minutes today? That actually, I mean, look, this is what we were talking with Steve Leisman about earlier. There's the economist view that they're going to keep going, and then there's the market view that somehow they're going to take their foot off the neck of the economy.
Yeah, no, I don't think they're going to take their foot off, honestly. I don't think they can with a core PCE number of 4.8%, and their target is 2%, right? So they're behind the curve, and they're going to have to continue to be aggressive. Do they do 75 in September? I don't know. I don't think so. They're probably going to do 50. But it doesn't matter, 50 or 75. Rates are still going higher because they have to get inflation down. They have to slow down growth. So I don't think the minutes are going to be that much market moving because it's kind of backward looking, right?
Let me ask you separately about the sort of meme stockification situation we're seeing with Bed Bath & Beyond. What do you think that Ryan Cohen is doing?
I have no idea. I mean, this company is in a world of hurt in terms of the financial metrics, right? I mean, their adjusted EBITDA fell last quarter, 218 million. Expectations were for negative 71 million, right? And earnings were a loss of 449. The same-store sales were down 27%. I don't think selling Bye Bye Baby is the answer, to be honest with you. Bed Bath & Beyond just missed it, totally missed it. They don't really have a digital presence. They have too many box stores out there. So, you know, there's a lot they can do to kind of fix it, restructuring it, but it's going to take a lot of time. And I just don't think you want to be anywhere near this, especially the stock's up 350% in the last 3 weeks.
I'm just trying to understand. I mean, I don't know if he clearly thinks it's worth $60 to $80 or not, but he's buying these options, right?
No. Well, so of course. I mean, he obviously thinks that there's
he also owns shares, which he could sell, interestingly.
Yes, he can. He obviously thinks that there's a lot more that they can do. They have a new CEO. As I mentioned, they can close a lot of the stores. They have to get more of a digital presence. They could sell Bye Bye Baby. I just don't think it's going to be an overnight fix. And again, the stock, I mean, it's gotten $1 billion in market cap value over the last month. I mean, this has had a heck of a move. I think if you're in this thing, you take your money and be happy that you made money. But I wouldn't stick around. I think it's just too much of a challenge. It's just going to take too long, I think, to fix.
Shepard Smith here. Thanks for watching CNBC on YouTube.